Welcome to our lecture video on Chapter 10. Chapter 10 is all about managing a business's cash, which involves maintaining cash in one or more bank accounts that a company may have. The nice thing is that with QuickBooks, we can transfer funds from one bank account to another, process our bank reconciliation, and then enter and pay credit card charges. Looking at our chart of accounts here, as you can see, most companies that are out there are going to have more than one type of, for example, cash account. Now, you can see for this company in particular, there is a cash operating and a cash payroll, which we learned about payroll with chapters 8 and 9. With the money market, that's a new account that we're going to be dealing with. Again, these accounts, anything that shows a balance here in this chart of accounts, anything that is a balance sheet account, we're going to go ahead and reconcile, which I will show here in a few minutes. So going into a little bit more detail about our new money market account, basically as a business grows in complexity, they may need a special purpose type of account, such as a money market account, that holds on to excess funds temporarily. They earn interest, and then when that money is needed for some other type of operating activity, it will then be transferred to a checking account. And transfers are something that we're going to do towards the end of a chapter. So in our chapter problem for chapter 10, what we're going to do is the first thing we have to do is update our chart of accounts. So I already have the chart of accounts open, and we're going to go in, and one of the first things that you need to do is to open up this money market account. And the way that you do that is you're going to go in and go into account, new account, and it would be a bank type account. Okay, and you can see here when you choose bank that you've got petty cash, checking, savings, and there's that money market. And then you hit on continue. And then you can give it a name, put in the description, the bank account. If there was an opening balance, you can put that in there and then do save and close. And then you can see here that we have our money market account set up. So because we have our accounts all set up, and here you can see that I have 3 different cash accounts, we may need to transfer money between those. And the way that you would do that would be under banking, you can go up and do transfer funds. And what this allows us to do, very much like you would your own personal banking, if it's from savings to checking or vice versa, you would say, okay, where am I transferring the money from? Where is the money going to? For example, maybe I wanted to put more money into the money market account. It tells me what my balances are, which is nice. I can put in the transfer amount, for example, make sure your date is correct, and then do save and close. And then if I go back into my chart of accounts in here and I go into my register, I'm going to click on Control R, which brings up my register. You can then see, if I go down to my transactions here, and actually because I put in the 2015 date, it's going to be one of the first ones because we're in 2017 in the book. But here you can see that cash transfer of the money that I transferred from my regular cash checking account, my operating account, to my money market. And if you double click on that, it will take me right back into the transfer. So transfers are very easy to do. The next part of our chapter that we're going to discuss is doing a bank reconciliation. And the bank reconciliation is found, and we had cancel here, the bank reconciliation is found under banking or reconcile. And again, it's not just the cash account that you could do this for. As you can see in your drop down, it's any of the balance sheet accounts that you can do and will in the course of business do reconciliations on. So the first thing you have to note when you're doing a reconciliation is your statement date. You also need to put in the beginning balance and then whatever your ending balance is going to be. So let's just pretend here that it's going to be 24,620, let's say 5, and I'm just making this up as I'm going along here. There may be a service charge, so you want to put that in. If you don't have the account for bank service charge, you would have to go up and do add new to add that in. And then maybe we earned, let's say, $25 of interest income. So we earned some money on that money market account that we have. Big thing again is make sure your dates are right. Make sure that your ending balance, again, this comes directly from the bank statement. Okay, that's the ending balance. Why aren't these equal to each other? That's because we've got activity, right? We've got deposits, we've got payments, we've got items that have not cleared, checks that haven't cleared, so that's why there's a timing difference there, or a difference in the amounts. So I'm going to click on continue. All right, and then you get this screen. Now on the left hand side are all of my checks, and on the right hand side are my deposits. So what I want to do is I want to follow along, follow with the textbook, okay, and mark the checks that have cleared. You know what, maybe this check number 12 didn't clear, and then I've got my deposit. I purposely did it this way, knowing that it would not balance. And the reason for that is this difference number right here, this negative 670.38, this number right here needs to be 0. When the difference is 0, that means that you're safe to reconcile, meaning you can click on reconcile now, okay? Because I have a difference here, that's telling me that maybe I'm missing a transaction, or I'm missing a deposit, whatever the case. I need to go in and actually leave this, okay, and come back to it. Sometimes reconciliations can be frustrating because you may be off. You may be off by $1 or under $1. Now, to be honest, if it's a few cents, you'll just do reconcile now and just write off the spare change. But when we're off over $600, as you could see, we're not going to just reconcile that. So to go back into my reconciliation, I just click on reconcile. Here's the amounts that I had put in, and I'm going to click on continue, okay? And you can see here that I still have that negative balance. Now, maybe that means that, you know, this check should have cashed, this one should have too. Oh, now I'm off $70. What we do not want to do in QuickBooks ever is do reconcile now. And I'm going to go through it and show you, okay, what this does, but it's not something we want to do, and I'm going to show you why. You want this difference to be 0 or leave it. When you hit reconcile now, it says, oh, there's a $70 discrepancy. It's telling you to correct the discrepancy. Go back in, look at your transactions, finish it later. If you force it, okay, which is what I'm going to do, it's not going to fix the problem, and I'm going to show you why. So I'm going to go back. I'm going to click on, instead of returning or leaving, I'm going to hit the big no-no here, which is enter adjustment, okay? Here we go. Now, students think, oh, I'm going to force it. I'm going to go in. I'm reconciled. See how the difference here is 0? But what I want to show you is that I'm going to show you the detail here on your reconciliation report, okay? See this journal here that it did? It says journal AJE7 for 70. Whoa, magic number, $70.38. If I double click on this, look what it did. QuickBooks did it's called an expense account called reconciliation discrepancies. Again, what we did not want to do. And I always have a few students that will go in and force their reconciliations because they can't get it to balance. I'm telling you, this does not fix the problem, okay? What you would have to do then is, if you did force it, you're going to go in and you're going to go up and you're going to delete this entry. Yeah, we're going to delete that, okay? The other thing that we would have to do is under reconciliations, okay, back into reconcile, when you first go in here, look what it says here, undo last reconciliation. You bet. I'm going to go in and I'm going to undo it. And what that does is that takes out that last reconciliation. Proceed with caution though, because when you look, I'm going to cancel here. When you look at your journal, I'm going to bring up the journal here. Okay. When you bring up the journal, I'm going to bring up all dates. I just want to show you that those dates, okay, sometimes those service fees or that interest, you see them here? The service charge and the interest, guess what? Those are still there. And that's the tricky part about undoing the reconciliation, is that it doesn't delete those previous service charges or interest. So what you have to do is you have to go in to each one and do edit, delete, yes. Okay, I'm going to close that and then go in here and get rid of your interest. Okay, once you've completely cleared out any anything that was related to your reconciliation, now you can go ahead and go back and fingers crossed your reconciliation is working. Okay, but that's a real danger, is to force any reconciliation. Bad idea. The next part of our chapter talks about entering our credit card charges. This is pretty simple. This is very much like doing transfers or something like that. Anytime we have a credit card that we're going to use to purchase goods, we have an expense that's incurred, and then we have to go in and then we have to record that. So what we're going to do is we're going to go up to banking. We're going to do enter credit card charge, and then we're going to say, okay, who was it from? Let's say we went in and ordered some glass. I'm going to click on OK. Change my date, put in the amount, or maybe items that I ordered or something like that. So maybe it was mirrors because it's a glass company. And let's say that I ordered 10 mirrors and I put that on the credit card. I can put in a memo and then just do save and close. And again, here's my credit card here, which you may have to add in as new. When you go in and add new, it's considered to be a credit card, by the way. So pretty straightforward on how to enter credit card charges. So the last part of our chapter, this is a pretty short presentation. This is definitely one of our easiest chapters, so enjoy this one while you're working on your Jen's tennis courts, are the banking reports that we may look at. Out there under reports, I'm going to cancel here. Out there under reports, under banking, I'm going to look at my deposit detail report. And this is going to show me the components of all my deposits to each account for a specified period of time. So if I do all dates, I can see the breakdown of each one of my deposits. For example, I've got a payment here from Cook Caterers, and if I want to look at that in detail, I can just use my quick zoom. It will take me out to the payment, but again, here are my deposit totals. The next report, which is really helpful, is called your missing checks report. And this is a report that actually displays information for all checks written from a specific cash account with our check number, the date, the payee. What's nice about this is that if you have missing or duplicate checks, you can actually go in and you can search by check number. So if you're missing a check in sequence here, luckily we're not, you could find duplicate or missing checks if there was one. So that's a really nice feature. Other banking reports that are out there under reports would be our reconciliation discrepancy report, which can be helpful if you're having problems with your reconciliation. And you could, for example, we deleted that journal entry that I had put in where I forced our bank rec. That would show up, but definitely that's a great report to show you any errors that you may have. Other reports that we would have in addition to banking would be our transaction detail by account report. Our transaction detail by account report, this would be found under accountant and taxes. And then if you look at the transaction detail, this will show you all of your detail basically by each account, okay, very much like what you would see in your general ledger. And then of course we have our typical month-end reports, our journal, our P&L, our balance sheet. And again, you can look at the textbook for example of those reports. So that is chapter 10. Thank you.